So today in this video, I want to talk about some lessons and some principles that have really helped transform my day trading career. Most traders don't have an approach that they can use every single day that's repeatable, that's effective, that works. Most traders approach the market on a whim. They wake up, they jump into this game with intense, extreme amounts of anxiety, pressure, right? There's ego on the line, right? There's desire on the line, there's greed on the line. Most traders just want to prove to themselves that they can actually do it. Maybe they want to prove to others, but they're missing a massive component that keeps them from actually getting consistent results in the market. That component is having a repeatable approach, something that you know works, something that you've put work in, that you've learned to really understand and do on a systematic basis. My process is so systematic I could do it in my sleep. Every single day I approach the market the exact same way. There's nothing new that I'm expecting. Every decision I make is based off what happens most often, right? I've gathered evidence. I approach it with a probabilistic mentality. This is why most traders fail. This is why traders that do this actually get consistent results. Newton's third law, right? Every reaction has an equal and opposite force, right? So if you are approaching the market in an inconsistent fashion, you are going to get inconsistent results. If you're approaching the market with a consistent, repeatable fashion, you are going to get consistent, repeatable results, right? It's a very simple principle, but most people do not implement it while trading. And I understand why. Most traders think, oh, I don't know what's going to happen today. I need to be very liquid. I need to be in, a state of fluidly where, I'm just adapting to market conditions. Yes, that's 100% right. But at the same time, if you go through your trades, your winning trades and your losing trades, you will identify similarities. You will identify repeatable things. You can find ways to use moving averages, critical levels, market structure, right? You can learn to use these tools in a repeatable fashion regardless of what condition the market is in. So today in this lesson, I want to break down those tools I use, how I use them, and how they led me to take two phenomenal trades. What day was this? On November 13th, 2024. Right? So number one, my first step, my first repeatable component that I use every single day is very simple, but yet so effective, is identifying critical levels, right? Critical levels are called pint numbers. The pint numbers are the four main price points on a daily time frame candle, right? We are day traders. We're trying to capture moves in between the hours of 9:30 and 4. Right? So it's important to be very clear on which levels make most sense to watch, right? Well, these are going to be the levels with the most volume from the previous day, right? It's very important, and we'll get into it. So let's identify our pint numbers, right? So our pint numbers are going to be end of day. That's the closing price from the previous day. There's massive amounts of volume that goes into this price point. We have to watch it. Number two is going to be previous day low. Right? This is the lowest price from the previous day. Number three is going to be previous day high, right? It's very important. And then number four is going to be open print, right? This is the open bell price. You can also watch the previous open print. That tends to play a pretty significant role. And you can see, look, previous open print in this scenario lined up directly with pre-market high, right? So let's just change the name on this so we don't get confused. Pre-OP, right? So it's these aren't coincidences, right? I don't believe in coincidence. Everything happens for a reason, especially if it repeats. And for all my traders that follow me and everyone on my Discord, you guys know the critical levels, they are always a factor in the day, right? They're always being touched. They're always being targeted. This is where our entries go, our exits go, right? The critical levels are going to show significance. Price tends to gravitate to these levels. Why? Because the liquidity, right? These levels hold higher amounts of liquidity. Therefore, when large money is trying to make a move, it only makes sense that they make moves off these levels, right? That's the whole philosophy behind it. That's what we use. That's our understanding. That's what helps us pull the trigger. That's what helps us stay in trades longer. That's what helps us bring order to this extremely chaotic and unstructured environment. And that is a very important thing. Once again, bring it back to developing the repeatable approach. It has to make sense. If it doesn't make sense, you're going to get lost in the sauce. You're going to get tunnel vision. Right? So we have end of day, we have previous day low, we have previous day high, we have previous open print, right? Very important level. And then the market opens, right? So now that I have my levels, well, let's whip out the pre-market plan. It only makes sense to break that down. So the day we are talking about is 11/13. I'm going to go over here to the pre-market plan. And let's go over here to 11/13. Bam, perfect. All right, so over here you're going to see in my pre-market plan, I do a bullish and bearish scenario. This helps, this keeps me from becoming biased or focused or married to a specific direction, right? Your mind is such a fascinating tool, but if you don't learn to use it properly, you'll find yourself trading against the market conditions, being tricked, faked, and your thoughts, your entries and exits will be influenced by information that's not serving you, right? So you have to remain unbiased, right? You have to approach every single trade where it doesn't matter if it goes up, it doesn't matter if it goes down. It's your job to identify who's in control of the market and trade with them. It's not to predict it, right? It's not to assume what's going to happen, right? No trader out there knows what's going to happen. There's no way of knowing, right? So just give up on that. It's your job to understand who's in control and trade with them. And to do this, we use our critical levels, our moving averages, our market structure, right? So SPY, pre-market plan, critical level to watch is end of day and 1 hour 50 EMA, right? So bullish scenario, I'm watching for buyers to step up at the 1 hour 50 and end of day. These are important levels. I love seeing them align. Buying acceptance above this level and open print means longs targeting, blah, 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 and ATH, right? Bearish scenario. If sellers can maintain trend defending 1 hour 50 EMA and end of day, I'm looking for short plays off the open targeting PDL, right? So once again, very simple, systematic, repeatable way to approach the market open, right? If buyers hold the 1 hour 50 and end of day, I'm targeting previous day high. If sellers hold it, I'm targeting previous day low and below. It's that simple, right? I'm going to use end of day. I'm going to use open print. I'm going to use the 1 hour 50 to help me make my decision and get into the market. All right, let's whip out TOS. So now the market opens, right? This is my favorite part. Now we are going to get open print. Open print is established right here. Open print is the open bell price. Right off the rip, 9:30, ding, 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 open print established, right? This is a very important level, and you will see as this lesson goes on why it's so important. All right, so we have open print right here. Now, once again, the pre-market plan was whoever can defend the open and end of day, I'm going to look for a short play targeting previous day low, right? And we're also going to target pre-market low, right? Because we never know how fast the market's going to sell off. We never know where it's headed. We can only make a educated guess, right? A hypothesis, right? If you're doing a science experiment, or any experiment for that matter, if you're a technician, if you're trying to troubleshoot an issue, you have to focus on what happens most, right? We call it the 80-20 rule, right? What happens most often, right? That is going to be your primary focus, right? We're not going to assume the erratic outcomes, right? You're going to make decisions based off what happens most often. Professional blackjack players, right? Those that count cards, they know this. Their whole job is to bet based on what has the highest chance of happening. They understand what has the highest chance of happening by counting the number of face cards, right? They understand how many are in a deck, and they understand how many they've seen. So based off that understanding, they now have a count in their mind, and based on what that count is, they then make a decision to either bet X amount of money or Y amount of money, right? That's the whole philosophy behind counting cards. The market's the exact same philosophy, right? It's what happens most often. Because once again, it's not up to us to predict anything. We can't. So there's no point in trying. It's up to us to figure out what happens most often. We do this with data, right? We do this with T metrics, right? We do this through our journal, right? We figure out what happens most often, and then we make decisions based off that information, right? We don't make decisions. We don't just go, oh, I'm going to short the market and take profit all the way down at previous day low today. Well, yeah, that does happen a lot, but how is price going to sell off to it, right? Are we going to sell off extensively very fast? Are we going to get extended from our moving averages, right? We have to remain aware of this and be able to make the decisions in live time to protect us from losing money, right? So end of days established, price sells off into it, the cloud gets its green and then it reverses, right? So our moving averages cross. So for all the traders that follow me, you guys know this is prime time HPT crossover strategy, right? The HPT crossover is identify the critical level, identify the moving average cross, and then identify the RBI or GBI entry, right? So notice, we get the moving average cross, open print, sellers take it, we're coming into the 50, and on this red candle, we sell off and we blow out the bottom of the candle before it. At that point, I'm in the market short. Let's refer to the Discord and see exactly where I got in this trade and where we called it out for the team. So, November 13, 2024, yep, that's the day right here. In shorts, open print stop, targeting previous day low. This is at 10 a.m., right? So let's go back. Let's put about 5-minute time frame right here. We have 10 a.m. candle is this large candle. So let's whip out the 2-minute so we can get a really clear understanding on where I got in the market and why. So right here, right? Look at this, guys. Price sells off, falls below open print, right? So at this point, I'm now leaning towards the bearish side, right? Because A, we've broken the 50 EMA. The moving average is crossed on the 5-minute, right? Let me whip out the 5-minute as well so that we could see similarities on both, right? So this is what the 5-minute looked like. Chart on the right. And then on the left was the 2-minute, right? So now you're going to see here, price at 10 a.m., right? This was our entry, right? This is what the market looked like when I decided I'm going to enter in puts targeting downside targets. This is so important. Every trader I coach, mentor, and lead and guide on my team, this is how you need to journal, right? This is what I tell all of them. Because, yeah, you could go back and look at the trade and be like, oh, yeah, look, this is where I got in short, blah, blah, blah. But once again, guys, it's up to us to define a repeatable approach. One that we can see Monday morning, Tuesday morning, Wednesday morning, Thursday morning, every day of the week. It's up to us to define what components make up our repeatable approach so that we can repeat that, right? We need a systematic approach. Once again, Newton's third law, we need positive input, positive output. Consistent input, consistent output, right? If you do not have repeatability, you will not get consistent results. Right? So price rips into open print right here. Look at this on the 2-minute. It's flawless. Rips into open print, sells off. This red bar, the 10 o'clock candle, wipes out the green one. At this point, I'm in the market short right here at 59673. We don't wait for the candle to close. We wait for the candle to wipe the bottom out, and then I get in short, and my stop is above open print. So once again, I'm risking about 60 cents here, 50 cents here, to make a potential $2.50 move, right? Proper risk reward, but more importantly, I'm trading my strategy, the HPT cross. I'm executing it without hesitation, without reservation. I identify my strategy. What's my strategy? Critical levels, moving average cross, and in this case, a green bar ignored entry. This was flawless. We sold off. In 8 minutes, we capitalized on a phenomenal trade. Look at this. Right here. In short, bam, money shot right here at 10.07, and then right here booked it at 10.08, and then that's where I was like one and done. But I wasn't done. We ended up getting another beautiful setup, which we have to take, right? Because that's our strategy. No trade is important or pretty, right, are special. All trades are the same. So we capitalize on a phenomenal move right here. Very simple, very systematic, all the way down to pre-market low. Well, before we go further, Josh, why did you sell at pre-market low, right? You said previous day low. Well, it's a very simple answer. Look how extended I am from the 9 DEMA on the 5-minute. Look at the 2-minute, right? And my goal here is to help you distinguish what a healthy trend and unhealthy trend look like. 2-minute time frame. Look at here. Look what the moving average is doing. It's hugging price. So price continues. Once price gets extended from the moving average, that is your cue to get out of the trade. Because 9 times out of 10, when you get extended from that moving average, price is going to rip right back into it, right? We call it the snapback. This works on all time frames. It's a principle that has changed my life and has really helped me with FOMO. It's helped me with chasing bad setups. It's helped me develop patience, and it's helped me become much more consistent, right? So once again, this is not healthy. Right here, we are, let's see, $1.50 away from that 9 DEMA. Therefore, I do not want to hold on to that. I'm taking all profit because I understand what happens most often, just like the card counter, right? If I'm $1.50 away from my moving average, there's a very high chance that price is going to retreat back up to it. Therefore, I am not holding. It's that simple. I don't make the decision based off how much money I'm up. I make the decision based on how far away I am from the moving average. It's very important. So then price rips off pre-market low. We snap back and we come right back up into open print, right? So now, just like we traded this to the downside, right? I now want to watch out for what it's going to look like if it goes back to the upside, right? Because the market's going to fluctuate, right? Large money wants to get in the market here. They want to get in the market down here. And if buyers control this, there's an 88% chance that price is going to go back to end of day open print. If they hold open print, there's now an 88% chance that price is going to go to pre-market high and previous day high. And that's exactly what happened. Look at that. Isn't that crazy? Right? So what I'm looking for is entry criteria. I'm looking for a repeatable way to get in the market. Right? So if you look here, as price comes back into end of day, I'm going to use the same criteria. Critical level, which is end of day and open print. We call this spot the sweet spot, right? Anytime critical levels are closed, this is called a sweet spot. We're looking to see who's showing strength here, right? We come back up into end of day. We come back up into open print. As we're coming into open print, we get our moving average cross. Number 1, critical level. Number 2, moving average cross. Number 3, guys, you already know it. I need my systematic, repeatable entry criteria. What is it? Red bar gets ignored. I'm in the market long, stop below the red bar, right? Let's see here exactly on the Discord. At 11:10, I'm in longs. Let's get it, targeting pre-market high, right? So this is what it looked like as price continued to rally in my favor. I got in the market right 11:05, this candle, right? Once again, because and I used to struggle and be like, dude, Josh, you're literally longing into high of day, because at this point we're longing into high of day. High of day is right here, right? You know how many traders will not take this trade because they're afraid or they assume that sellers may show up? See, instead, me and the HPT Army, we will long this because we know how to identify acceptance, buying strength, buying pressure. This is buying acceptance. How do we know this? Because we are seeing strength at the critical level. How are we seeing strength? Red bar, ignored. Moving averages, high and tight, no extensions. This is what we call healthy trend. These are trends we want to get into. We do not want to hold trends like this. Why? Because we are extended from the moving average. Learn to identify and spot healthy trends, and you will have a massive edge over the market. I'm telling you guys, this whole understanding has literally changed my life. Critical level, right? Because you have to understand where to watch the market, right? Moving averages, right? You have to understand what a healthy trend is, unhealthy trend. You need to understand what an orderly trend is, what a unorderly or chaotic trend looks like, right? And then you need to be able to understand where to actually pull the trigger, where to get in the market. Once you get the red bar that's ignored, you're in the market long, targeting upside targets, right? So guys, I hope you learn to understand the importance of having a systematic, repeatable approach. It has literally changed my life, right? And guys, if you're ready to build the proper skill set, build the proper mindset, and develop the proper habits, click the links below. Join Trader Boot Camp, one payment, 12 months access to the Discord. Guys, it's time to change. If you don't change, nothing's going to change. If you do change, you start to change that input, you're going to start getting different output. I love you guys. Click the links below. Like, subscribe, share this to someone that needs to see it. And until next time, stay blessed.